Hello D-traders, you are watching a video review of the Asian session. Today we are going to discuss the comments of a central bank's policymakers and how they influence market sentiment as well as currency movements. Let's start. Yesterday, the US stock market closed with gains amid a rise in tech stocks. In turn, high-tech shares climbed higher thanks to Elon Musk's investment. Musk purchased 9.2% of a Twitter stock. It led to a 25% surge in Twitter's share price in a pre-market trading. However, in the Asian trade today, the rally of the US stock futures has almost stopped. Traders are anticipating the release of the FOMC meeting minutes for March. Investors hope that the regulator will give new clues on its monetary policy plans. How is the Fed going to curb high inflation? Will it raise the key rate by 0.5% in May? Will the watchdog taper the bond buying program even more? Speculators are seeking answers to these questions. What is more, they would like to learn how aggressive the Fed is going to be on monetary policy tightening. Those traders who are less inclined to take risks still prefer safe haven currencies. They want to caution themselves against high volatility, especially amid geopolitical turbulence. Yesterday, the US dollar index reached the weekly high of 99.08. After that, it retreated to 98.80. However, it was able to assert strength. Today, it entered the range of 98.86 and 99.03. Perhaps the greenback is consolidating instead of grabbing ahead of the release of the FOMC meeting minutes. In addition, the inverted yield curve, which we mentioned yesterday, remains flattened. However, the weakening euro may bolster a further rise in the US dollar. Yesterday, the US dollar index advanced for exactly this reason, yet this scenario may come true only if the US session. Now, the US dollar is hovering at 98.89 against its main rivals, and the yen slightly strengthened against the greenback amid the Bank of Japan governor's comments. Haruhiko Kuroda said that FX rates are changing very rapidly compared to the movements in the last decade. Perhaps investors interpreted his comments as a hint for changes in monetary policy parameters. Following his speech, the dollar-yen pair fell to 112.89. It was trading at 122.79 at the close of the previous trading, and now the pair has started a short-term consolidation in the range of 122.35 and 123.00. Time will show whether bears or bulls will take control. The Bank of Japan is facing entirely different problems compared to the Fed. The Asian region suffers far stronger from shortages and rising energy prices. However, the impact of geopolitics on the Japanese economy is very uncertain. Besides, a weaker yen is beneficial for the economy. However, inflation in Japan seems to have sped up. At the same time, the Bank of Japan maintains its ultra-loose monetary policy to support the economic recovery. The yen is likely to extend losses as the Bank of Japan keeps the key rate at a low level. The Fed, on the other hand, plans to hike it by 50 basis points, which is bearish for the yen. Today, the Reserve Bank of Australia held a meeting. As widely expected, it kept the interest rate unchanged. Philip Lowe decided not to change monetary policy ahead of the federal election. The watchdog kept the cash rate unchanged at a record low of 0.1% for the 16th month in a row. Inflation has risen significantly and it's likely to accelerate even more. The Reserve Bank of Australia can no longer sit on the sidelines. It dropped a previous pledge to the patient on a policy and promised to act appropriately. Nevertheless, any rate increase would be a shock for local borrowers, as they have not seen an official increase since 2010. Besides, households are sitting on record levels of mortgage debt. Market participants perceived a change in the Reserve Bank's rhetoric as a signal for the upcoming monetary tightening. As a result, the Aussie surged to a high of 0.7605. In the Asian session, the AUD USD pair was trading at 0.7638. It's now flirting with the current support level of 0.7537 and the resistance level of 0.7644. Australia is a net energy exporter and a major producer of other raw materials, and this is why the Aussie will significantly benefit from a high commodity prices. So investors will monitor closely all the Reserve Bank of Australia hawkish comments. Analysts are expecting a rate hike in the third quarter or as early as June. And that's all for now. Subscribe to our channel and stay up to date with the latest market news. Feel free to ask your questions down below. Don't miss our next video review and see you soon.